everyone, welcome to this week's DeFi Pulse by Weekly. Great to have you here as we dive into the pulse of what's buzzing in DeFi. Here is what's on today's agenda. Brave New DeFi will walk us through the latest insights from yield opportunities to key risk trends shaping the space. Hugh will share foundation updates from the Nexus Mutual team, including our exciting new partnership with Encuro and ImmuneFi, where the mutual is stepping up to underwrite a real-world risk and to cover for more bug bounty types of risk. As part of the Nexus Mutual 101 series, I'll cover the mutual's golden partnership ecosystem and how it strengthens our mission. And don't forget, there's a POAP waiting for you at the end. Let's get started. Brave, take it away. What's new in DeFi?
Morning, everybody. Thanks, Sam. Yeah, so there's been a lot of excitement in the market since we caught up on our last call. ETH is up 15% the last couple of weeks, and funding rates currently are ranging between 20% and 70% in off-chain and on-chain markets. Athena's SUSDE, which is a tokenized yield-bearing synthetic dollar that makes the basis trade accessible and composable in DeFi. SUSDE is currently offering 29% APY to stakers. For the most part, that represents the average funding rate across all markets, since Athena manages the underlying assets deposited into their protocol across the major derivatives markets to secure this yield. So we're seeing more inflows on chain, and yields continue to pick up steam. So let's take a look at some of those benchmark rates from Vault's FYI. The USD benchmark rate currently stands at 10.66% APY. It's up over 99% over the last 30 days. The ETH benchmark rate is the same as it's been over the last 30 days, 2.87% APY. This is essentially the ETH staking APY that gets tracked over time. So we're seeing a big push for USD benchmark rates. 30 days ago, it was in the 5% range. It was in the 5% range, largely speaking, between 4 and 5% for the last several months. But now that we've seen such an increase in demand for leverage, we are seeing, just an increase across the board for USD lending, and there's a lot of USD yield opportunities. But looking at lending markets and yield-bearing stablecoins, we've seen a lot of rate increases since those on-chain yields are starting to increase. It's been a catalyst for rate increases across lending markets, and we've seen some hikes for some of those yield-bearing stablecoins we talk about all the time, like the Sky savings rate, the DAI savings rate, and some others that we'll cover. So looking at lending markets, Sky Protocol, formerly Maker, they increased their stability fees 1% across their vaults and increased the DAI borrow rate on Spark Protocol to match the current Sky savings rate, which is now 9.5%. Aave has seen tremendous growth in yields over the last month as well. Stablecoin yields for lenders range from 10 to 16% for most markets, while borrowers have seen rates climb toward 10% across most markets, 10 to 20% across most markets. And Aave DAO has increased the Go borrow rate to 13.31% to match the growing trend across other markets and to help keep Go on peg. Go, for a little while this month, has gone off peg, but it's been repegged essentially due to the increase in rates on Aave. This trend is also present in a lot of other on-chain lending markets as demand for leverage has grown significantly in the current market. For yield-bearing stablecoins, like I said, the Sky savings rate saw an increase to 9.5% for SUSDS holders. The DAI savings rate saw an increase to 8.5% for SDAI holders. Curve launched their savings CRV USD contract, which currently offers 15.16% APY to Curve USD holders who deposit into that contract. So that contract takes a percentage of revenue generated in Curve's Llama lending markets and then transfers that to CRV USD holders. So that's where that yield is coming from. And then Inverse Finance's Stake DOLA, or SDOLA, has earned an average of 12.5% APY over the last 30 days, while the current APY offered for SDOLA holders is about 17% APY. So again, a lot of demand for leverage, a big increase in yields. So major stable coins are starting to see more inflows as more people are bringing money on chain and looking to earn yield. since the gap between treasury rates and on-chain rates is starting to grow. And there's a pretty big gap between those two. Looking at Circle's USD supply, that's grown by 2.3% in the last week. And Tether's USDT supply has grown by about 3% in the last week. So again, a lot more money starting to come on chain. I spoke about the role of leverage in DeFi in our last call. Since then, I've only seen leverage in on-chain markets grow as more people are looking to go long on ETH and BTC. Other people are executing looping strategies, which we also talked about last week. So that's where someone deposits one asset as collateral, they borrow another asset, they swap that asset into that collateral asset, and then they redeposit that on the collateral side, and then they continue to borrow. So they can use that strategy to leverage up on their collateral asset. So this looping strategy has been very popular for Athena's SUSDE. So like I mentioned, SUSDE tokenizes the basis trade, and that has been earning SUSDE holders 29% over the last week. That's what the current APY is if you look in Athena's UI. So because of that, people are basically borrowing stables like USDT and USDC, and then swapping that for USDE and staking it to amplify their yields on Athena. So given the amount of demand for this, we've seen SUSDE listed on a lot of major lending markets. And just 2 weeks ago, it was listed on Aave, which is the biggest lending market in DeFi. So they started out with some initial supply caps, which were hit almost immediately. I think when they first listed SUSDE, the supply caps were hit within like one block of it going live. So just tremendous demand. They've increased that. The supply caps currently sit at 512 million SUSDE, and those caps have been hit. So it's 100% utilized. So it's very likely that Aave is going to increase the supply caps again, since SUSDE has been driving demand for borrows across other stablecoin markets within Aave. And users are borrowing stablecoins, like I said, to leverage up on SUSDE to increase the yield they're earning. So if you're looking at the difference between the two, so you earn 29% APY with SUSDE, you can borrow stablecoins between 10 to 16%. That still leaves plenty of room for traders to profit. So in turn, Aave is seeing their revenue grow significantly. What tends to happen in these markets, though, is that in on-chain markets, yields tend to converge to prevent arbitrage from completely wiping out one lending market versus another. So that's why you're going to see interest rates and yield rates continue to rise if demand for leverage continues as it has over the last month. That's why, again, those rate hikes we talked about, that's because there's just been a lot more demand, and you're seeing people adjusting some of the lending parameters across like Compound, Aave, some of these major lending protocols. So as USD denominated yields climb higher, and that, like I said, that gap between US Treasury yields and on-chain yields expands, we can expect to see more funds flow on-chain. If you keep track of, the alerts where there's like 1 billion USDT or 1 billion USDC minted, we've seen a lot of those here in the last couple of weeks. But looking at on-chain yields, I'll go over some notable on-chain yields that I've found in my research this week, but be sure to do your own research and determine what is suitable for your own risk profile. Looking at some of the protocols we have in the base DeFi pass, Arcadia Finance. For USDC lenders, there's been a lot of demand for leverage farmers that are farming yields on Aerodrome and Uniswap through Arcadia Finance. And because of that, the APY for USDC lenders has been astronomical here over the last several weeks. So right now, USDC lenders can earn 26% APY by lending on Arcadia Finance. It's been consistently high. I think over the last 7 days, it's been about 22% APY. But again, Arcadia Finance, as they've grown and as demand has increased in their protocol, the APY for USDC lenders has been consistently high. Looking at extra finance on base, USDC lenders, there are a couple USDC lending markets. In one market, USDC lenders can earn about 17% APY, while another market offers 11% APY plus another 6.5% APY in extra token rewards. Looking at ETH lenders, on extra finance on base, you can earn between about 4.6% to 5.2% APY on your ETH if you lend it in extra finance on base. Overnight finance, looking at their USD Plus token on Base, holders can earn 13% APY. But for overnight finance on Arbitrum, USD Plus holders can earn 46% plus APY right now. The yield on Arbitrum has been very, very high as well. DeFi Finance has some great vaults on Base and on Mainnet. Of course, they have a lot of other chains, but some of the yields that I picked out on Base, the TBTC CBBTC vault that is managed using the CowSwap liquidity manager, that's earning about 17% APY on Aerodrome. The CB ETH and ETH LP on Alien Base through Beefy, that's earning 18% APY. For some of the stablecoin vaults, DOLA USDC SLP pair on Aerodrome is earning 20% APY, while the USDC USDT LP on Aerodrome is earning 17% APY on Base. Looking at some of the Beefy Finance vaults on Mainnet, the Curve USD Llamaland vault is earning 50% APY. So that's where you deposit your CRV USD into that vault, and that is lent out to one particular Llamaland lending market. The APY has been consistently high there as well. So you can put that into that vault, and then Beefy is going to auto compound your rewards, which are a blend of CRV USD rewards and then some CRV token rewards as well. And then there are two for FX USD. So the DOLA FX USD Curve Vault is earning 47% APY, and the Go CRV USD Curve Vault is earning 44% APY. All three of those I just talked about are on Mainnet. So the gas fees are a little bit higher, but the yield has been consistently high in those vaults as well. Looking at Morpho, there's actually quite a few Morpho vaults on both Base and Mainnet, where you can earn between 15 to 29% APY on stablecoins. And that's a combination of Base lending rates and Morpho token rewards. Hyperliquid has been talked about quite a lot because of their airdrop, but there's been a lot of trading activity on Hyperliquid, which is more of like a derivatives protocol. So there are a few ways that you can do it. You can provide some liquidity in the Hyperliquid provider vault, the HLP vault. That does come with some risk of market movements and everything, but depositors in that vault who can deposit USDC are earning about 21% APY. Depositors in other user vaults are earning pretty large outsized yields in the triple digits, but again, that comes with market risk. You can go into the Hyperliquid UI and check that out. And of course, we have protocol cover available for smart contract risks. On Uniswap V3, there are a couple pairs USDE, USDC in the 0.01% LP. That's been earning about 93% APY over the last month and is currently earning 260% APY. That's on Mainnet. There's been a lot of demand there. The Go USDC 0.05% LP. This has earned 31% over the last 30 days and is currently earning 85% APY. And again, that one's also on Mainnet. Looking at PancakeSwap on Base, the DOLA USDC pair in the 0.25% LP has earned 156% APY over the last month and is currently earning 217% APY. And then the last ones I'll look at are on Pendle. Pendle on Mainnet has three markets. They're all stablecoin markets. They all have 113-day maturities. So SUSDE is earning 22.87% fixed yield over the next 113 days. USDE is earning 22.67% fixed yield over the next 113 days. And SUSDS is earning 12.16% fixed yield over the next 113 days. So a lot of very high yields on stablecoins, some high yields on ETH as well. Of course, there's a lot of other opportunities out there. You can look at Vaults FYI for some yield opportunities and DeFi Llama's yields page as well. There's a lot of great places to look for yields there. But those are just some of the notable yields that I pointed out. All of these protocols I've talked about, we have coverage for. The ones that are on Base, we have the Base DeFi Pass, which is flexible coverage. So you can move your funds between Aerodrome, Arcadia, Beefy, Compound V3, Extra Finance, Moonwell, Morpho, Overnight, and Uniswap V3 on Base. You can move your funds between those protocols. We cover the underlying sub-protocols underneath these protocols as well. So you can move your funds between those protocols while maintaining your protection up to the covered amount. So with yields in the 15 to 20% range across those covered protocols, with some opportunities that are higher, it's a great time to earn yield on base and protect yourself against smart contract and economic risks. You can learn more about that on OpenCover. If you go to their site, opencover.com, and you can find the base DeFi Pass. They have a lot of great information about it and everything. Of course, you can always ask questions on Discord, or you can ask us here on Twitter. If anybody has any questions about the base DeFi Pass, feel free to raise your hand, and I'll call you up on stage. Otherwise, I will go through some governance updates. So we're working to put NMPIP 243 on chain today. And this proposal outlines pricing parameter changes and added pricing functionality for fixed price public listings. This proposal is related to some new products we have in development, while one product is nearing the soft launch stage. I've proposed that members grant the advisory board the power to decrease the price bump ratio parameter from 20 to 5, to reduce the rate at which a listing's price increases after a cover buy, to remove surge pricing from the protocol's existing price calculations, to change the global min price to the default min price, and that would stay at 1%, and then create functionality to set a minimum price at the listing level, which we'll call the listing min price. And then we would create functionality for public fixed price listings that any pool manager can stake against. With that min price at the listing level, you can create a public listing that has a floor price so that it's not a race to the bottom. So with all of these changes, we will be allowed to, or we'll be able to provide users with a better cover buying experience. We can reduce pricing for some battle-tested listings and remain competitive on certain product types like ETH slashing while supporting new product development. So once this on-chain proposal is up, we'll put out some announcements, but the voting is going to be open for 3 days. Members are going to be voting again on whether or not to grant the AB the authority to make these changes once the engineering team finalizes each individual product and has it ready to push to production. Members who vote on this proposal are also going to receive a proportional share of 100 NXM in incentives based on the number of people who vote. This incentive is there to cover gas costs for people who participate in on-chain voting. So be sure to review the proposal and participate in the vote this week. Any questions on the on-chain proposal before we move on? Okay. If not, I'll turn things over to Hugh to give the foundation update and talk about some of the recent product announcements that we have. Hugh?
I still see Hugh as a listener, whereas he should have been a speaker. So I wonder if...
Yeah, I've invited Hugh to speak, so he should be able to come up on the stage and speak.
Okay.
All right, good. Thank you. Got it sorted out now. Cool. Hey everyone. Thanks for having me on, Lee, and everyone. Alrighty, so foundation update. Sorry, doing a million things at once, and now we got the speaker sorted. So now I'll get my head back on track. Okay, so yeah, foundation update. A lot of really cool things happening, especially on the product side. So you may have seen just a little while ago that we just announced the Immunify bug bounty coverage product. So this is a new product we've just launched today with Immunify. And the idea here is that projects that want to offer bug bounty services, so where white hats look at the code, and if they find a bounty in the live code, they can earn a reward, a bounty. The idea here is that the bigger bounties that you can offer, the more white hats will look and are interested in looking at the code and and finding potential bugs. And so the more secure your code is, but often you need to list quite a high bounty to attract the best white hats, and so therefore the project has uncertainty on what their cash flow might be and if they can afford that type of bounty or not. So what we've come up with this new product for is basically a product which will cover 80% of the critical bug bounty payment, up to 80% of the bounty payment. And so it allows the projects to have much more certainty around what the costs are going to be and how that's going to work. So this is a project specifically for projects in the space that have bug bounty programs on Immunify. And hopefully the idea is we'll end up creating a much more safer and secure DeFi for everyone, because hopefully the bugs we found before there are hacks. So yeah, it's really, hopefully, I think it's an exciting product. We've had a lot of requests for this type of thing, and excited to work with Immunify on this one. I think they've probably got the largest bug bounty program in DeFi, so hopefully they're going to be rolling it out to a bunch of their projects and seeing who is going to be interested in taking this up. And we've got some really solid inbound so far, so really excited by that one. And hopefully we'll see some cover sales coming in over the month and into the new year. So that's pretty cool. That's kind of the first one. The second one, we do have a new product that we're planning to launch before Christmas. So hopefully we will get that shipped soon. I won't say much more about it right now, but it's pretty exciting. And we also have a bunch of other deals coming up in the near future as well. Hopefully some of them will close in December, but some probably also close in January. So there's a lot of potential deals happening here, and some of them are kind of real world deals. One item I did want to go into a bit more was the Insuro deal. So Insuro is a regulated, BMA regulated, so Bermudan regulated insurance company. They provide coverage or insurance to various programs, such things like flight delay or other guarantee type products and things like that. And so they have a panel of like 6 or 7 different clients there that are that they're covering like a whole range of different users underneath that. And what we've done here is effectively Insuro has offloaded risk into Nexus, and so we're kind of acting like a reinsurer in a lot of ways. So we're covering Nexus is covering the Insuro pools, and I think that's very interesting, because it's basically another instance of a regulated insurance entity offloading risk into Nexus as the insurance alternative, the DeFi insurance alternative. And so I think it's a really interesting way of deploying crypto capital against real world risks and getting that bridge into the real world. So I think there's a lot of this is, I would describe it as kind of a pilot that we're very hoping and hopeful to build upon and expand further. So we're now working with the Insuro team on how we can increase this kind of partnership and cover more of the risks that Insuro are writing. But we started small, getting something live first as a kind of an MVP, and then we'll look to expand it. So this one's pretty cool as well. Again, covering some like non-crypto risks, which is cool, and to me is an indication of kind of how flexible the Nexus platform is about what it can do. We've got the platform, we've got the capital, and now we're looking to expand it and cover a whole bunch of things within crypto and beyond. So I think that's a really cool partnership, and we've got a lot of people that are inbound off the back of those announcements, back of the Insuro announcements about, okay, that's pretty interesting. How can we potentially work with you as well on that type of stuff? So I think in general, if you think at a very high strategic type level, there's a whole bunch of risk looking for a home, and there's a whole bunch of capital within DeFi that can be deployed more effectively. And working out how to create the bridges to connect those two is the tricky part. But we've started with some pilots, and we're doing a whole bunch of different things there, but looking to scale it up and make it even bigger. So I think there's a very strong case to grow this as far as, because it feels like the market dynamics are really suited. Like we've got the people who want to buy the cover, we've got the capital that wants to deploy against it, and now we have to work out how to connect the dots in the most efficient way possible. So we're working that out at the moment, and I think there's a lot of potential there. So that's pretty exciting too. I guess more specifically on protocol type stuff, as Brave mentioned, there's a whole bunch of pricing changes that we're looking to put on chain governance proposal today, which would hopefully help us out in a lot of different ways. So I'd consider them a whole bunch of different tweaks, but they're all they're all being made off the back of solid, tangible feedback from users, etc., and products that that we can enable. So I think a lot of them are going to be very useful as we expand out the product set and distribution options. So that's going well as well. We're also, I'm sure people will be glad to hear this. We're also just started fully our internal testing of the staking UI, our next version of the staking UI. So it's been a while coming. It's definitely been quite complicated to pull it all together. There's a lot of data in there behind the scenes, but that's coming quite soon. So I'm excited to get that out to everyone as well. It looks really cool. It's got some nice features, and definitely be good to transition the staking part onto the new look and feel of the app. So that's really cool. And I guess it's really just more generally, I think it's really good to see the increased traction that we're getting, especially over the last couple of weeks. Cover amounts have increased a good chunk. We've got our big funds renewing all the covers, and there's definitely an uptick in, I guess, a wider user base buying coverage on a whole bunch of different things. And one in particular, the base DeFi passes, seems to be growing in popularity there. It's definitely get some solid cover buys quite regularly on it, and I think it's nice to see that as a flexible option for people looking to deploy in DeFi across a variety of different protocols. I think that's a really good product. So I'm looking to build on that as well. So I guess lots of different things going on now. Lots of potential products, lots of potential distribution options, and also a lot more inbound from funds and I guess institutions within the space looking for coverage, and that are reconnecting now that I guess we've had it. There's obviously the price is going up, and there's a bit more interest in general about allocating to DeFi and crypto. So the direction of travel is really positive, and really excited to get to see the product announcements we've had over the past few weeks, and also the new ones we've got lined up over the coming weeks and into next year. So yeah, feeling really positive about a whole bunch of things right now. Yeah, happy to take questions on any or all of that.
Thank you, Hugh. Thank you, Brave. I'd like to talk about the last week in numbers, and maybe even talk about the month in sales. As Hugh just pointed out, we had a good month overall, and let's look at some of the top performing products. First off, in November, the mutual sold over $98.1 million in cover, with members earning more than $555,000 in premiums. Among the top performing products of the month is Aave V3 protocol cover leading the way. The EigenLayer and EtherFi bundled protocol cover followed closely. The top 10 list also features protocol covers for Morphobolts, Hyperliquid, and Pendle. Excitingly, the newly introduced products, Fund Portfolio Cover and the base DeFi Pass sales, also broke into the top 10. November was a standout month for the mutual, marking the third consecutive month where cover sales exceeded $20 million in growth. The mutual continues to build momentum in the dynamic market that we are finding us in now. Related to this, as part of the Nexus Mutual 101 series today, I'd like to spotlight our ecosystem partners. These partnerships are vital for driving momentum and delivering real value to our members by protecting against risks in crypto and beyond. Hugh just mentioned Ensuro and Immunify. And I'd like to start with another key partner, OpenCover. OpenCover has been instrumental in helping distribute Nexus Mutual cover on layer 2s like Base, Arbitrum, Optimism, and Polygon. They have partnered with our foundation teams to launch products like Transaction Cover and the DeFi Pass, for which we are seeing good sales, making cover more accessible with lower gas fees and no KYC. Sherlock, another long-standing partner, combines smart contract audits with coverage, offering protocols up to $10 million in coverage after audits. This innovative approach strengthens trust and security across DeFi in Vibe. The retail mutual through Inshare uses on-chain capital to expand cover for over 5,000 small UK businesses. This partnership had marked our first step into real-world risk coverage, setting the stage for further partnerships like Native and Enshuro. Talking about Native, which is a crypto insurance broker, Native leverages our capital pool to provide about $20 million in on-chain cover per risk, simplifying crypto-native payment and claims processes while expanding risk capacity. Enshuro is, like you mentioned, a blockchain-based reinsurer, enabling risk transfer between on-chain capital and real-world insurance markets. In addition to Unify, we also have Liquid Collective, another important partner that offers slashing coverage for enterprises staking ETH. Looking ahead, this ecosystem is prone to grow some more. We're eager to onboard more ecosystem partners through our grants and accelerator programs. If you're building the future of on-chain protection, these initiatives are designed to support you. You can learn more on the DAO website at nexusmutualdao.io and apply directly from there to one of these programs. Last but not least, we are working closely with other DAO and foundation teams to create new programs to further engage with our members in creative ways and to support builders in advancing our mission to offer affordable protection using decentralized solutions. So stay tuned and get involved. Okay. If there are no questions at this time, please join us on our Discord or feel free to DM us directly anytime. But I'll be closing this call if there are no raised hands. And want to thank you for being a part of today's call and for supporting us. If you'd like to claim a POAP commemorating your attendance to the call, just DM me. I am Santuran on Discord, and I'll make sure to share the mint link. Stay safe in DeFi, and we'll catch you on the next call. Have a great week ahead. Bye.
Thanks, everyone. We will see you in a couple weeks.
Cool. Thanks, everyone. Bye.